Happy Friday, Eric Bible with the Bible team at Neil Home Loans. Another week into 2024, and the optimism and excitement holds true. Mortgage interest rates were challenged slightly, but ultimately pulled out a win. And as we start today, the 30-year fix is down from last week, 6.76 to 6.72. And more signs are becoming glaringly obvious that better rates are in front of us. So let's dive into that. I also want to dive into some projections for 2024 and what we're watching over the coming weeks, which will have influence in mortgage rates, which will ultimately dictate activity in marketplace. So first and foremost, the interesting aspect this week, CPI. As we know, consumer price index has been the talk of the town for the last 2 years. Inflation, inflation, inflation. We want inflation to come down as that's going to lead to the Fed cutting rates. And this report that was released yesterday, Thursday, was incredibly important due to the fact that labor last week, BLS, Bureau of Labor and Statistics jobs report, came in hotter than expected. We know two mandates. Fed wants maximum employment, but ultimately to show signs of weakening in the labor force and to bring inflation in line with their 2% target. Last week, we got a hotter than expected jobs report, and inflation today, markets were anticipating to see more wins in inflation. We actually saw the exact opposite. It was honestly kind of surprising and a little bit scary yesterday morning when that report dropped 5:30 on the West Coast. Markets immediately did not like it. We actually saw bonds start to deteriorate, which is a leading indicator that mortgage interest rates will get worse. And it was centered on where we expected the headline year over year inflation number to increase. It increased higher than expected. We actually saw it come in at 3.4, where the market was expecting 3.2 over the 3.1 the month before. Additionally, core, which is the all important as it strips out all the components that the federal government does not control, it really focuses on what their efforts combat. We also saw core come in hotter than expected, which was at first, oh boy, here we go again. It's a repeat, pump fake, we're scared. That came in 3.9 as opposed to the projected 3.8. But a key note here, these are some of the lowest levels we've seen on core inflation since May of 2021. So again, at first glimpse, it was scary. Markets did not like it. However, as the day progressed, some interesting occurrences took place. And ultimately, we had the best trading day in mortgage-backed securities we've had this week and arguably this year. Yes, we're only 2 weeks in. But the interesting phenomenon here was despite news that was not in our favor, mortgage-backed securities found a way to find footing and ultimately challenge the narrative in the market that interest rates want to go lower. Investors poured into bonds, and we saw ultimately price improve, which indicated and produced lower interest rates. So something that we're very closely watching, as you know, it's ultimately as if the market is saying, yes, hey, we know inflation's coming down. This print encompasses the holidays. The components that drove inflation were really flights, food away from home, and shelter, which we know in real time are coming down. And with the holidays last month, people were traveling more and people were eating out. So the other underlying components of that inflation report showed inflation ultimately coming down. So very interesting concept, something we are absolutely going to be watching and reporting on as things come in. But yesterday, despite the headlines, mortgage rates responded positively. And your consumers are going to hear this as I see this hitting the news feeds into next week. So something that you can proactively reach out and touch base on that, hey, yet again, rates are falling. Another component, so many of you know Barry Habib. He runs a company called MBS Highway. A lot of the industry follows his guidance. They have very accurately predicted forecasts in the real estate sector over the previous years, so much so that he's won the Zillow Crystal Ball Award a number of times over. He released his predictions earlier this week for 2024, and it's really centered around supply and demand. We know inventory has been incredibly tight, and it doesn't look like inventory is breaking loose anytime soon. So there, he expects and forecasts with very rigorous data to back it up that inventory will be the driver in appreciation. So it looks as if inventory is going to remain light, which in turn will drive home prices up. He also expects that interest rates will land somewhere in the low sixes, possibly high fives, but put a very strong caveat in there that there's a lot of factors that could drive rates lower, but it could also mess with rates as we saw last year. So it's something, again, we're confident that interest rates will head lower, but as we experienced in 2023, conventional wisdom sometimes gets thrown out the door and the market will do what the market will do. That said, there are so many baselines of support that indicate interest rates are falling, and we're going to see better rates as the year progresses. So, the narrative that we need to continue to hammer into our clients is this is the time. The opportunity is here, as when rates fall, home prices will accelerate with inventory being so light. If any of you would like to go through this projection, I would love the opportunity to give it to you. Just please reach out. I will be putting together a webinar later this month with it as well. Things that we're watching, very important aspects later this month, which will give more credence to interest rates falling or potentially rising if the data does not support. PCE, personal consumption expenditures, that will be released on January 26th. That is expected to show inflation declining. That is what the Fed watches very closely, followed by January 31st, the first meeting of the Federal Reserve for 2024. We don't know what's going to happen, only they do, but the market is eagerly waiting to hear what develops at Jerome Powell's level, as well as the Federal Reserve, of what we can expect looking into the new year. That said, it's been an exciting start to the new year. I'm excited to be here. I know you all are as well. The energy definitely feels different. Let's maintain this momentum. And as always, if there's anything we can support you with, we're here. Make it a great day. Make it a fantastic Friday and even better weekend. Thanks again.